Welcome to the video version of the Pirls Stock Market Commentary, featuring the proprietary bull-bear point and figure market breadth summary chart for July 31st, 2016. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell to 2.05 from 2.19 last week, maintaining its strongly bullish territory. The total count of securities in bullish or bearish patterns increased fractionally to 3,113. The count of bearish stocks increased 5%, while the count of stocks in bullish patterns decreased 2%. The Pirls PNF Market Breadth Summary Chart shows us a market now 5 consecutive weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly email version of the Pirls Stock Market Commentary, free of charge, simply enter your email address in the space provided. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 52 points for the 17th advance in 24 weeks. At a positive 637.05 points, it continues above all 5 tops above plus 100 and continues above all 6 bottoms below minus 100 in the last 3 years. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 3 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on higher average daily volume. Momentum. Now up to a positive 114.79 from a positive 89.94 a week ago, the CCI 20 daily continues outside the plus or minus 50 range required for a valid zero-line reject long entry signal in a Woody's uptrend begun 2 weeks ago. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 13 weeks ago, while the daily CCI 20 began a Woody's uptrend 2 weeks ago. The CCI 20 weekly rose to 208.8 from 190.80 last week after forming a zero-line reject long entry signal for Monday 7/11 open. We will continue to follow the results of this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: brokers, retail, and some tech on top. Oil and some tech on the bottom. Bullish: brokers and semis continue in the top 5. S&P retail has left the bottom 5 and entered the top 5. Oil and oil services continue in the bottom 5. Bearish: disk drives has re-entered the bottom 5. Computer hardware has left the top 5. Gold and silver has left the bottom 5. Focus this week from www.maldeneconomics.com. The Fed is preparing for negative rates. Here's the sign everyone missed. The following are a few key points. The chart below is from the www.zerohedge.com posting of this M. Alden economics blog. I think it's possible that the Fed will push rates below zero when the next recession arrives. I explained why a few months ago in my free weekly column, Thoughts from the Frontline, at Malden Economics. I'm concerned about the legal authority question. If we are to believe Yellen's sworn testimony to Congress, we know three things. As of February, Yellen had not, quote, fully investigated, end quote, the legal issues of negative rates. 2. As of May, Yellen was unwilling to state the Fed had legal authority to go negative. 3. As of June, Yellen had no doubt the Fed could legally go negative. When I wrote about this in February, I said the Fed's legal staff should be disbarred if they hadn't investigated these legal issues. Clearly they had. I'm sure Yellen was telling the truth when she said in June that the Fed had no such plan. But plans change. The Fed says it's data dependent. If the data shows we're in recession, I think it is very possible the Fed will turn to negative rates to boost the economy. Except, in my opinion, it won't work. Thank you for viewing this week's Santa Pirls Stock Market Commentary, featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, www.s2pmarketsignal.com. Hoping that you are enjoying a peaceful and pleasant weekend, that you're looking forward to a prosperous and productive week coming up, and wishing you true success.